Thank you for joining us today for our third session of Small Credit Union Spring Training. Today we have Pam Thornton from the Employers Association of the Northeast. Pam is an experienced HR leader, strategist, and speaker with 30 plus years in private industry and nonprofit in the nonprofit sector. She held HR leadership roles at Lego Systems, K2 Sports before joining the Association of the Northeast in 2014, where she serves on the leadership team and leads the HR team. Pam partners with member organizations such as the CCUA to deliver custom HR solutions and is a sought-after speaker on leadership development, compliance, and workforce strategy. She holds a bachelor's degree in business with a focus on strategic HR, is SHRM CP and PHR certified, and serves on the Rhode Island SHRM Executive Board. Close?
That is true.
All
Yes, I'm on
right.
their board.
Pam, the floor is yours.
Thank you so much, Dean. Thanks for the introduction. Welcome, everyone. So glad to be with you today on this very important session about the pressing challenges facing credit unions today. You folks have a partnership with the Employers Association in that we provide you with a HR hotline. So you can call Monday through Friday, 8 to 5, and ask any HR question of the team here, and we are happy to answer your questions and help you strategize with what you're dealing with. And then also, part of our partnership is we are also offering you an HR, what we call an assessment or an audit, where we can go through some key compliance things with you. It takes about 30 minutes. It's a conversation with myself that I'd invite you to certainly have with me, that I can help you assess gaps and look at ways that you can streamline things. So I'd love to meet with you. If you're interested in that, please just shoot me an email. My contact information will be at the end of the presentation. So let me start by showing you exactly what we're going to cover today. This is the roadmap. It's going to show you exactly what we're going to explore together over the next hour. Each section will build on the previous one. So moving from understanding the problem to implementing solutions. We start by understanding the talent crisis and why it matters to you and your bottom line. Then we identify the 5 specific challenges you're likely facing right now in your credit union. We're going to explore solutions and compensation, succession planning, and culture. So what makes this different from other presentations is I'm not just telling you about problems. We are going to give you some tools to assess your own situation and create your own solutions. So let's start by looking at why we're here. The talent crisis that's affecting nearly every financial institution and everybody else too, but specifically focusing on you folks. This is what I call the reality check slide. These are statistics that are a bit sobering, but they're also what make the work you're about to do very essential. So that 40% statistic, within 5 years, you could lose nearly half your executive team. This isn't speculation. This is what McDermott and Bull found in their 2025 analysis of credit union hiring patterns. And when I say 40%, I mean if you have 10 executives today, you might only have 6 in 5 years. The 5-year timeline, this is people that are potentially leaving between now and 2031. Some will leave in year 1, some may leave in year 5, but the trend is clear and it is accelerating. The timeline's important because it tells us we have a window to act, right? So we're not hostages here. We can do some things to affect this. The critical gap. This is the gap between the talent you need for future growth and the talent you can currently retain. It's growing wider every quarter. So you might be thinking, well, we'll just hire replacement talent when people leave. But here's the problem. The talent market is getting even more competitive. It's not getting less competitive. Let's be honest. The people leaving your organization are often the people who are most marketable elsewhere. So we've got the perfect storm. We've got skills gaps in digital transformation, compensation pressures from larger institutions, and cultural shifts towards purpose-driven work. They're all colliding at the same time. Digital transformation. So your organization needs people who understand APIs, cloud platforms, AI. I mean, it's on the tip of everybody's tongue, right? Where do you recruit them? I mean, they have options everywhere, right? So Looking at compensation pressure, larger banks and fintech companies have deeper pockets. They're aggressively recruiting from credit unions. We know this, we feel this, we see this. I hear about it when I talk to you on the hotline. The cultural shift, younger employees want to work for organizations with a mission, and that's where you have the advantage. But it's only if you're intentional about taking advantage of that advantage, right? So as I kind of go through these factors, I want you to think about what's creating the most immediate pressure for your credit union. Is it executive departures due to compensation? Is it difficulty filling specialized roles? Difficulty retaining younger talent? So I mentioned that 40% statistic actually comes from McDermott and Bull, which is an executive search firm who looked at where credit unions are hiring and why. Okay, so if you are interested in more about that, I have references at the end of this presentation about where some of this information came from. So understanding the magnitude of the crisis is critical, but let's get specific about what's causing it. So here are 5 challenges that are probably hitting your credit union right now. They're interconnected, these 5 challenges. Solving one without addressing the others only creates new problems. These aren't hypothetical challenges. These are things that are happening at credit unions every single day. So when we look at challenge 1, or that first box there, talent acquisition and retention, you're competing against those larger banks, like I talked about, fintech, financial tech companies, and certainly other credit unions for the same talent. We're all in a small space, right? So we've got bigger companies coming in and offering different things. So specialized roles like chief digital officer or chief data officer can take many, many months to fill, right? And once you fill them, keeping them is equally as challenging. So, when you think about these kinds of roles, they have multiple offers, they have multiple options and choices about who they work for. So that's why that can be a challenge. Then we've got our hybrid and remote work dynamics. So 90% of some credit union staffs now work remotely or hybrid. This can create a geographic advantage. You can hire talent anywhere, but also it can be a cultural challenge, right? So you can't build culture through proximity anymore. It has to be really intentional if we're going to be in this remote hybrid workspace. This means that you have to have something specific, a strategy around engagement, communication, and that cultural reinforcement. We have to have probably something documented that we're following, right? That's how we really make sure things happen. So challenge 3 that I have up here is these cultural and generational divides. So multicultural leadership is now 30% of management in many credit unions, whether you're small, big, in the middle. This is great for diversity, but it requires cultural competency, right? So when we think about boomers, they value stability and loyalty. Millennials value purpose and flexibility. Gen Z values impact and authenticity. We have heard this before, right? These aren't just personality differences. These are proven trends across the cultural space. And these things will affect retention, engagement, and leadership style expectations. Things like a CEO communication style that worked with a 90% boomer leadership team needs to evolve for a 30% multicultural leadership team. So how do we go about doing that? And these are the considerations that we really need to think about. Technology integration. 92% of HR leaders are planning to integrate AI into talent management. How many of us know that AI is already in our recruiting space? For those of us that are doing the recruiting, no matter what platform you're using, AI is embedded in it. If you're paying for Indeed or you're paying for those, specific websites that work with credit unions or financial institutions to hire them, we know that it's embedded. So we've got to figure out how to really understand it and integrate it into what it is that we're doing, right? So this is, resume screening, onboarding, even personalized learning paths, even performance management and succession planning, right? So it's the question really isn't if you're going to use AI, it's really how quickly you're going to adapt to it being used because it's being used with or without you. The early adopters of this are the people that are going to have a competitive advantage. They'll be recruiting faster, they'll be identifying talent better, and they'll be retaining people better because it will help us streamline functions. And then challenge 5, I've got noted here, did a fair amount of research to put together this presentation, but I've also heard, from our credit union members about the succession planning compliance. So the NCUA rule that went into effect, I think back last year, January 1st, and now it's mandatory. So it's not optional in terms of having a succession plan. My understanding is that regulators will be examining your succession plans. It's a requirement, but it's also a real opportunity to be intentional about developing internal talent, right? So, we don't always have to look to a rule to make us do something, but sometimes it motivates us to really look at how are we actually doing this. So let's dive a little deeper into one of the biggest shifts, which is the remote work revolution, I call it. This one crosses, many multiple challenges, and it's really reshaping what talent expects from employers. What this slide is really demonstrating is that fundamental shift in what workers actually value. So the implications for compensation strategy and workplace culture are really profound. It's not about what they prefer anymore. This is about competitive market dynamics, right? So we've got another statistic. 24% of your workforce would take a pay cut for flexibility. That's like a quarter of our workforce is going to take a pay cut. So what is that telling us, right? It tells us that flexibility has a real quantifiable value in the market. It also tells us that if you're not offering flexibility, you're essentially requiring a compensation premium. So no remote work is costing you talent or money, or maybe it's both, right? So really thinking about that. 10 years ago, remote work was perk. Today, it's an expectation. And 100% of candidates now expect to at least discuss remote hybrid options in interviews. If your posting doesn't even mention any kind of flexibility, qualified candidates may not even apply. So it's already baked into what the candidates are expecting. And you don't get credit for offering it, but you lose candidates if you don't offer it. That's just what happens. So I can tell you about a specific credit union that we work with when they moved to hybrid work, which was, something that everybody was doing, and they had reservations about it, right? But it's something that they had to do. Hybrid work and engagement jumped from 55% to 78%. So 23-point increase in engagement. Turnover dropped to single digits, which I know we would all love to see, right? Think about what that means. Instead of 30% turnover, they're at 5%. That's millions of dollars in reducing hiring costs. The cost savings alone, not to mention the stability and continuity, and probably more nights filled with sleep is massive for all of us, right? So what I want to caution you about is that, remote work isn't like a free pass for culture neglect, right? So it actually requires more intentional culture building when you have remote workers. And you're all feeling this. If you're in this space, you're dealing with it. So, you have to be more intentional about culture building when people are not in the same room, right? So regular town halls, monthly positive leadership communications, celebration events, these become even more critical, and the consistency of them become more critical. Just like when you're in the kitchen and you see the person making lunch, having that conversation about what happened over the weekend, right? People expect to do that. It's got to be the same intention. Are candidates seeing it as competitive? Like, do we have 3 days, in the office, 2 days work from home? Or is it something that you're negotiating case by case? So really be thoughtful about what you're doing now and how you want to move forward with this and be thinking about that. So we know talent wants flexibility. We've covered this, but we also need to retain our leaders, right? And retain our workforce. And we need to ensure we have people ready in our workforce to step into leadership roles when others leave. So that brings us to succession planning. And this is where I said earlier, this regulation becomes an opportunity for us, right? The deadline's already passed. You're probably well down the road on figuring out how to be compliant. And, if you're not fully compliant, obviously this is urgent, right? If you're compliant, this is about deepening your approach. We want to be thinking about, how do we maximize it and make it a competitive advantage, and not viewing it as like this, this punitive rule, because it's something we should really be doing anyway. Harken back to that talent pipeline 40% turnover statistic, right? That we talked about at the start. So that makes the internal talent pipeline development process really mission critical. So we're going to spend some time on that. So you actually need people to be ready to step into critical roles when you have openings. But you need to be really thoughtful about this. Otherwise, the alternative is really expensive. It's external searches, it's longer time to fill, it's the cultural disruption. When you think about an internal successor, they can start more productively on day one because they understand your culture, they understand your business, right? And so making sure that we've got that internal pipeline development muscle moving, right, is going to be important. So, our best practice is always going to be to look internally first. This is really crucial for the reasons we've talked about. The other thing is, they may leave if they're passed over, and we may know that, but let's just be really sure that we're comfortable that, okay, they may leave if we don't consider them. And maybe look at making some of these decisions sooner, right? Around whether it's development or whether it's replacing that person. Let's not wait until we have to fill in a succession slot. The most expensive mistake would be promoting an external CEO only to have your rising internal star leave because they weren't given the opportunity. Truly, if they are someone who could be developed, through a succession plan. So really thinking about this, as an individual in your organization, someone who is driving that hiring plan, who are the 2 to 3 internal candidates for each critical role that you have? What do they need for development? Really looking at who's their mentor, right? What experiences should they get in the next 6, 12, 18 months? The visual here shows this isn't like a one-time compliance event, right? It's an ongoing process, and it truly should be an ongoing process. So first, let me give you some context on how to keep talented people once you've developed them, because this is where the rubber meets the road, right? So we can develop them and they can leave, or we can develop them and figure out how to keep them, right? How do we retain them? That's really our ultimate goal after we spend all this time and money and resources and energy. This is where the compensation strategy comes in. So let's talk about that for a bit. And I will be the first one to say, I am not the compensation expert, but we do have compensation experts on our team. Here, we actually have a whole department who does this and who has given me some ideas and thoughts, and my research supported some of these ideas too. So this slide really specifically addresses the market reality in that base salary alone isn't enough to compete. And we may know this already, but this concept of modern total rewards and having strategies around that are really essential. And this is where a really smart compensation strategy becomes a competitive advantage. So we're talking about things like executive retention plans, or SERPs. So it's a supplemental executive retirement plan. It's essentially a promise to provide additional retirement income to key executives. Here's how it works. You commit to supplementing a key executive's retirement. So for instance, our CFO makes $150K for base salary. At retirement, we've committed to paying an additional 30K a year as retirement income. So why on earth would you do this, right? Because it keeps your CFO from leaving for a competitive offer from somebody else, right? They're basically, these plans signal a long-term commitment and reduce the incentive to leave for another offer. They're particularly effective for retaining your CEO and your CFO, right? Typically, a cost is 5 to 10% of salary over time. So keeping someone who would cost you, 75 to 150,000 to replace. This is not just about money. It's about saying we value you in a meaningful way. And, think about the remuneration, right? So split dollar programs. These align executive wealth building with company performance. So think of it as your company funds life insurance that builds wealth for the executive and protects your institution. So here's the value. The executive gets life insurance protection plus cash value growth. So your credit union gets a partial recovery if they leave or pass away. It's a win-win. Executives will accumulate wealth and your institution is protected if they unexpectedly leave. So it's more sophisticated than a SERP. It requires professional design, but the payoff is truly significant. And usually this is used for like your top 2 to 3 executives in your organization. These are things that we consider when we are small, medium, or large organizations, particularly when we're small. Tiered retention bonuses. So some retention requires active incentives, not just long-term plans. So you might offer like 90-day, 120, or even a 6-month bonus specifically to protect critical executives during transitions. So if your CEO or your CFO is retiring, we'll say, you might offer the next CFO a 50K bonus at 6 months to make sure they stay through the transition. Why do we say tiered? Because it keeps them engaged and it keeps them focused through a critical period. It's short-term retention, but it bridges the gap while you develop internal successors. And it, certainly can prevent turnover cost. Personalized benefit packages. So different demographics value different benefits. Your younger workforce might value student loan repayment. Your older workforce might value healthcare and retirement, right? Multicultural workforce might value different benefits based on family structure and country of origin expectations. Some credit unions and organizations in general, right? But we're talking with credit unions today. They think one size fits all for benefits, and that trend is really moving in the opposite direction. Really looking at the fact that people have different needs is something that should be on the table for consideration. Offering dependent care assistance attracts parents, right? Offering health savings account matching attracts everyone because healthcare is out of control. This doesn't mean doubling your benefits budget. It just means being strategic about allocation. So really looking at how do we do that? I'll give you some market context that again comes out of this study that McDermott and Bull did. They found that 78% of executive searches were filled at the top quartile compensation. So this means if you want to compete for talent, you need to be strategic about where you invest your compensation budget. You can't be in the 25th percentile on everything and expect to attract top talent. But you also don't need to be in the 75th percentile on everything, right? You've got to be competitive. Look at your base salary for your area, making sure that your geography is being specific around what the market is bearing. So that's a lot of information about total rewards and ways to do it. I think you need to really be thinking about what your current package looks like, right? Are you competitive? Where are you losing talent based on compensation pressure, and what are the things that you're strong in? What I'll say is, certainly we've gone over a couple things here. We talked about how to compensate executives. We talked about how to plan for succession. We also know that compensation alone isn't what's going to retain people. They need to grow, right? They need to feel challenged at every level, but certainly in leadership, and they need to feel like they're being developed. So let's talk a little bit about leadership development. When we look at this slide, this one really shifts the focus from retention to development. So, modern credit union CEOs need different skills than operational leaders. This is about evolution and really being intentional about capability building, right? So when you think about the credit union CEO of 2026, that probably looks very different from the credit union CEO of 2016. And it might be the same person, right? But 10 years ago, the job was primarily about operations, compliance, board management. Today, it's far more complex. It's external relations, strategic positioning, media management, stakeholder communication. It's because credit unions are now more complex, right? The regulatory environment is more complex. Competition is more intense. The CEO is now they're a public figure, right? They're not just an internal operator, not trying to minimize what it used to be, but it has shifted, right? Hopefully, people feel that and see that. They're expected to, speak to the media, speak to the regulators, go to conferences and speak about the industry, build relationships with community leaders. If your CEO isn't comfortable on camera or in front of a media outlet, that's a gap you need to address probably, right? As we move forward. We think about technology. 92% of HR leaders are, we've got the AI thing happening. It's not about replacing humans. It's about augmenting human capability. Are they able to do that? Can the person see 3 moves ahead? Do they understand business strategy? Do they understand the needs of the board members and what the employees and our community leaders are expecting? These are different operational skills. They require different training and different development. So really looking at what is it that we want to accomplish and how do we go about doing that and tapping into what it is that we're going to do for development. If you're doing internal promotion tracks, are you identifying future leaders early and giving them stretch assignments, right? So your COO will say, your chief operations officer, do they have the potential to be a CEO? Are they getting exposure to board management, external relations, regulatory relationships, or are they just managing operations? Like, is there an opportunity there? Do you have mentoring programs? Are your current leaders actively mentoring the next generation? This is when I'm talking about mentoring, I'm talking about like really one-on-one relationships that they're building with each other. Regular meetings, exposure to executive responsibilities, and check in on how they're performing on these responsibilities, right? So external education, right? It's not just about what we're doing internally. I know some of us are, tapping into a lot of our own educational practices, but how are we looking externally as well for leadership courses? Maybe it's executive coaching, that multicultural leadership reality. So minority board representation reaches 14.2% and growing. This is another stat that came out of that. So this isn't about like political correctness. It's really about business competence. So your leaders are going to need multicultural competency as well. How are we going to get our leaders in a space where they understand and respect diverse perspectives? It's not just about the way we look and sound and behave. Really, it's where do these people come from, right? So if your leadership team is 90% boomer males, you might not recognize multicultural competency gaps, but your candidates and your employees will, right? So it's about really developing cultural intelligence and not about checking boxes and really understanding that competency. So yes, I think a challenge, right? So who in your organization could be the CEO in 3 years? What development do they need? And are you intentionally building that capability? We all know that employee engagement is super important, right? This is our role as the HR strategic leaders. If we're on with HR specifically, this is about improving operations and what we get out of the return on investment for our talent initiatives, right? So this is where you can really have an immediate and measurable impact. Things like onboarding. So organizations with strong onboarding see 82% improvement in retention. And, onboarding is like forever. Well, it sounds exhausting, but it's evergreen, right? People are at different places in their journeys. So you want to really make sure you're focusing on this onboarding piece and how are you going about doing it, right? Because it beyond retention, it also improves new hire productivity as well, right? So you've got people immediately hitting the ground and producing. Let's talk about, and I can, spend time talking with you. I'd love to chat with you about what those programs look like. And, even after month 3, happy to have an offline conversation, but it does continue on after 90 days, right? So we think about strategies in general. How are we going about engaging people? Are we celebrating? Is it a one-off? Are we consistent? How are we building community? To ultimately create belonging, right, is through these initiatives. So really looking at these engagement strategies to affect retention as well as turnover, right? And we've talked a lot about remote engagement. We know we can't rely on the hallway conversations, right? That these remote relationships have to be structured. They have to be clear. We have to have virtual celebration moments, just like we do when we're in person. And credit unions that are doing this well are celebrating in remote environments. It's intentional, right? So really looking at the way that we do this and focusing on the medium of being virtual instead of being in person, with that same intent, that same mission to make sure we're accomplishing this in a effective way. So having a checklist if you need it, right? What does it look like for engagement? And are we checking all those boxes? I know when I initially onboard someone, right, I'm sending them all the things. They get the planner, they get the water bottle, they get the personal note from the staff, right? They get in here and they are ready to go. Their desk is set up, it's decorated. We've got the meet and greet, and we continue that on, right, with meetings with the staff and the team and those kinds of things. You really have to have kind of a structured plan. And it's the purpose of it is really, to be really specific. We've covered a lot of ground, but it's kind of time for you to pause and look inward, right? This exercise gives you a chance to really assess where your credit union stands. And I want this to be your own exercise. I want it to be confidential. We're not going to, talk about each other's, results, right? But I want you to really think about where your organization is and where you could be, because I'll provide you with some thoughts about a timeline, right? So you're going to see 5 dimensions here, right, on the left-hand side. And it goes from succession planning all the way down to employee engagement. And so based on your self-assessment ratings, here's what your score indicates, right? So if you add those up, right, or if you look at specifically your scores for each category, an assessment and potentially a next step. So if you're, 4.5 to 5, you're a model for the industry, right? So that's an area that you probably don't need to focus on. But similarly, 3.5 to 4.5, right? Strong foundation. You have a good practice in place. Maybe you need to fill some gaps, right? Look at a few key areas, identify what they are. And then, anything below that, right? We've got opportunities, right? Specifically, if you're below a 2.5, you've probably got some critical intervention that needs to happen. And I've got some, personalized recommendations. If, succession planning is the one you scored lowest on, right? We know that we've got a ruling that says we have to get moving. So work on that. Compensation. You might be losing talent to competitors. You want to look at benchmarking your comp, your total rewards against other credit unions immediately, right? Or within the time that you're planning. Remote work strategy. If you're scored low here, you want to look at your policy, make sure you have one. If it's informal, formalize it, right? And communicate it, and make sure that you're assessing the engagement gaps within that policy. If leadership development is something that you've scored lowest on, you probably need to be really thinking about what your plans are for readiness for next level roles here, and looking at some individual development plans, right? So map it out. Immediate next steps, next 30 days, highest priority second, and then you can kind of look at some of the quick wins, right? So what are the things that you can affect pretty quickly as you look at those things? Talent strategy for these 4 pillars of excellence. So we really talked about a lot of things, right? Having 4 pillars creates an integral approach, right? So it's very intentional. They're not separate functions that can be siloed, right? So really looking at your workforce insights from your compensation strategy. That's going to inform your succession planning strategy, which requires strong onboarding and engagement, right? So if you invest in leadership development, but you don't have competitive compensation, your leaders leave. If you have strong onboarding, but no clear succession plan, people burn out. So you just can't fix one dimension. They all really kind of work together. And you need to be really honest to create this picture of where you are before you design a solution, right? So going through the process, can be surprising sometimes. We think, people are leaving for salary, but exit interviews show that they're leaving because there's no clear path for advancement, right? We've all heard kind of these stories, right? Looking at the strategy for compensation and total rewards, right? You don't have to do this all at once. Maybe you implement it in phases. Not all of us can do anything all at once, right? We've got to have a phased approach when we look at these kinds of things. So all of this is designed to reinforce your unique mission, and it is going to be unique to you. Credit unions, exist for a reason. They're a member service. They create community impact, financial health, and they have cooperative principles, right? So there's a real mission there, and the best talent wants to work for an organization with a real mission. So don't forget about that piece. When you look at these 4 pillars here, think about where you shine and where you have critical gaps. Things that you can start to implement immediately, right? Looking at day 1 to 30. Let's hit some quick wins here, right? 90 days is just long enough to achieve some meaningful results. It's not all going to be done in 90 days, but it's going to give you focus and momentum to commit to something within 90 days. You can assess your situation, you can put together some solutions, and you can launch some implementation in that time frame, right? So really understand where you are in day 1 through 30. Do your assessment. Find out, which key positions don't have a succession plan. Why are you losing people? Is it compensation pressure? Which of the roles have turnover? Those kinds of things, right? And then days 31 to 60, like this phase 2 piece, right? Let's design some solutions based on what we've learned. This is the piece where you really need to think about putting down some succession plans in writing, right? We probably already have these, but what are we actually doing with them? And do we have things like a compensation plan that's competitive? Are we implementing some of these unique strategies around total rewards? What is our opportunity to do so, right? And then looking at that 61 to 90 phase 3 piece, right? This is really the launch. This is creating communication pieces. This is having conversations. This is making it easy for people to understand, what and why you're investing in them. So it's looking at things like activating maybe an employee referral program, establishing the leadership development tracks, starting with one cohort maybe, and then having some quick wins along the way, right? And recognizing what they are. Is it implementing an AI tool in recruiting and being able to talk about the success of it, looking at some data? For you all, it's really thinking about, well, what is going to have the most impact in your credit union, and which phase considers is something that's concerning to you the most, right? The roadmap is pretty clear, but you really need to think about, are you ready to implement something like this? And again, it doesn't have to all be done at once, right? So have a phased approach that you can act on.
Hi, Dean. Hi, Pam.
Michelle.
Hi.
So I think one of the things that we all struggle the most with, and this group that we have on this call, I think, besides maybe Laura, I think I'm the largest of the group. and that means 17 employees. So
Mhm.
for most of these credit unions in this group, and a lot of the small credit unions, kind of the compensation and the training and the benefits packages, those are just not even doable for a lot of us, right? So I can put all that training and stuff into people, but I'm training them to leave because there is no forward path. Because we are so small, there's no job openings to become leaders. So I think that's a lot of what we struggle with, is not necessarily in the moment filling the CEO, CFO, COO spots. It's keeping that lower group engaged enough to want it to hang out, right? Like, we can't afford the benefits. We're definitely not pushing compensation, because I'm having to make pay cuts myself in order to pay people down, right? We've talked about split dollar plans, but that's a lot of work. I've actually declined.
I love this question, Michelle.
I
and you got
actually
like
declined
three.
that.
So I'm going to pause you. What is the cost to not doing some of these things? If you're telling me that we're not paying people competitively for our space, our market, they are going to leave. So what do we do? Just give up? Like, right? So, and I'm answering our question with a question. We also can't sit here and say there's no opportunity for leadership. Leadership doesn't have to be this. Leadership can be this. It can be scope of responsibility and expertise and partnership, and really leaning into people who want to be here, because the place that we've created for them is a home, and it's a place of stability, right? These are things that, if we can't do everything, we have to be able to do something, right? So, and it's about prioritizing, right? I gave you a lot of information. You can't do all of it, but what can you do? The question is, what can we peel away or take, compartmentalize, or extract is probably the better word, from what we've talked about today, that we can affect, and that it's going to matter to people, right? And that might mean some conversations that are going to be uncomfortable for us, and they're going to be courageous. What would keep you here, Michelle? Pam, I know I can't offer you a C-suite position because we just don't have that kind of hierarchy here. But what could we do? What would you be interested in?
Yeah, I think that's the hard question, is that there is not much for us to offer. We've been through those basic kind of things that you've laid out for us. We've all tried those. And I think we need more innovative ideas and ways to engage people that is not going to make our margins even smaller, right? Because we do have to think about the succession of hiring a CEO outside and having to come in at, a 50% more than what I get paid, because that's just what the market is, and setting ourselves up for those types of things. For me, our succession plan was to merge, and that's what we ended up doing, because we have no space. We have no space to grow up employees, right? We can try to be as competitive as possible, but there's a cap, and then there's stagnation. And that's where we're running into. And I think maybe some of the other credit unions run into that too, in the sense that we have long-term employees that stick around and are dedicated, but there's a cap to it. And at some point, they don't have a choice, again, because of the economy and certain things. They don't have a choice to be stagnant in that position and know that there's a cap in where they're going and what they're going to get paid and what the benefits are going to be.
So thank you for that, because here's what you just shared. What you know. You shared what you know. So if we know that this is what's going to happen and we really don't have control over it, how do we plan for that? How do we plan for that succession? Because it's going to be an automatic turnover, right? But we can plan that we know it's going to happen in, I don't remember if it was 3 or 5 years or whatever it was, that tenured employee. If we know that's going to happen, the data shows us that, and we don't have control over the other things, let's plan for that. That's our succession plan. That's what we plan for. It might sound a little counterintuitive, but that's what we plan for. That's how we go about it. And to answer the first part of your question, I think we need to involve, probably is a better word, the employees that are here, that we have tenure and are trusted and are here for a reason, and ask them what is it that isn't within our control, right? We set it up that we could be doing that we aren't. And it's not, they pay us more, better benefits. These are things, again, we can facilitate those conversations to really get to those unique things, because they're going to be unique to your credit union, and they might not be in Laura's credit union. They might not be the same reasons why people will stay. It's not a one size fits all. We talked about that.
What I've found, this certainly isn't a solution, but I've been working in the credit union world for about 30 years, and what I've found gems, quite frankly, is I hired a woman who had worked in the credit unions for many, many years. I hired her when she was 62 years old, and she was so phenomenal. I left that credit union, and after I left the credit union, she ended up leaving down the road too. But she stayed there for about 6 years, so she worked right up to she was 8 years old. Several other people I hired in the credit union world, not necessarily where I am right now, they're in their late 50s. And they're looking sort of for a home. They're really, really good workers, and they turned out to be a better bet simply because as people have mentioned on the call, you hire someone 22, 3 years down the road they're looking to move. Unfortunately, because they can often get better salaries than a smaller credit union can offer. So certainly what I'm saying is not a solution, but I have found it very useful to, maybe someone else doesn't want to hire a 62-year-old person, but that was, one of my better hires in my career, and they were great. They had great experience. And, I'm just throwing that out there as one thing that works, but certainly not a solution to the problem.
Yeah. I mean, Kevin, that's excellent. That is being resourceful. And I'm not saying like we're not being resourceful, but it's moving the conversation from no to trying to figure out how to be resourceful. So you pulled the curtain back, Kevin. You said, we're not automated. We don't have the benefits. We don't even pay, or whatever you did, right? But here's what we do have. You found the unique person that job satisfied. That's why the person's been there for 6 years.
Right.
And that might not feel very updated is the only word that's coming to my mind. Like, oh, that's the new way. That's the very strategic. It is resourceful. It finds the person who fits the role, who's going to be satisfied, right? And so that's a best practice for sure, because it's not for everybody, right? How do we pull back the curtain and share the things that really are going to make it somebody wants to work there, that does meet their needs?
Working in a small credit union your job isn't always so linear, because it's a small environment. You're wearing multiple hats, and it's finding the right personality. So to Kevin's point, finding that person that's maybe close to retirement, they're not looking to move up the ladder, but they don't want to necessarily retire at that point either. They're looking to this is what my expectation is. I want to get to retirement, but I don't want to have to fight for my position. I'm going to come in, I'm going to put in an honest day's work, and at the end of the day, go home. I think that as long as the expectations are laid out in front of them and it's the right fit for the credit union, it does fill that gap.
I got lucky, quite frankly, but
right.
And when these people presented, and quite frankly, I had to go. I had the time. I explained myself why I wanted to bring this person in, and I was actually able to get a little bit more money for them, but they were getting paid well below what they maybe could have got somewhere else if they were 35 years old.
Sure.
So, I got a lot of it was luck, but when I did see that opportunity, I absolutely jumped on it. But it's luck too.
Yeah.
Well, I can appreciate luck, but I know, and I have a bit of a purple squirrel role here, right? I have to interview far more people than I ever had to before, just because of the climate, but also because of some of the same things that you're talking about. We're small. We're not, as automated. We're not paying, as much as a for-profit firm might be paying, right? Or, one of your large banks or fintech companies, right? That you're not paying that. So, what can we do? Do we have some things that we can provide them? And we have to get really good at being able to articulate what those things are, because we're all working there for some reason.
Right.
We need to articulate that, and it won't be for everybody. And you'll find the 1 in 10, right, that it works for, and they'll stay the 6 years.
Right.
Right.
Yeah. I want to thank everyone that hung on to the call today. Pam, thank you so much for all of the information.
Good.
Thank you again, and enjoy the rest of your day.
Thanks, everyone. Thanks, Dean.
Thank you.
Take care. Bye-bye.